You think your money sits safely in the bank, waiting for you in a solid steel vault? The truth is that physical money, those stacks of bills, they barely exist anymore. What you have is a digital number on a screen, and that number is part of a much larger, much more complex game. This game is called fractional reserve banking. It sounds complicated, but the core idea is shockingly simple. When you deposit your money, the bank doesn't just hold on to it. They're legally required to keep only a small fraction of it, say 10%. The other 90%, they lend it out. But here's where it gets wild. The person who borrows that 90% then deposits it into their own bank account. And guess what? That bank then keeps 10% of that asterisk deposit, and lends out the other 90%. Through this cycle, your original deposit is multiplied over and over again. Money is literally created out of thin air, but it's not created as wealth. It's created as debt. Every new dollar that comes into existence is a loan that someone has to pay back with interest. This is the engine of our modern economy. Banks don't lend money they have. They create new money by lending. This process inflates the money supply, meaning there are more dollars chasing the same amount of goods and services. This leads us to inflation, the silent thief. Central banks, like the Federal Reserve, manage this system. They call it monetary policy. When they want to stimulate the economy, they lower interest rates, making it cheaper for banks to lend and create even more money. The result? The money in your savings account loses its purchasing power over time. Every dollar they print is like a hidden tax on your wealth, slowly eroding what you've worked so hard to save. Think about it, the value of a dollar isn't stable. It's constantly being diluted. That $100 you put away a few years ago could buy you the same amount of groceries today. This isn't an accident. It's a feature of the system. Inflation encourages you to spend or invest your money rather than save it, because holding on to cash is a losing game. It pushes everyone to participate in the market, taking on more risk just to keep up. And who benefits the most from this? The institutions that create the debt in the first place. They profit from the interest paid on every new dollar created. It's a system where debt is perpetual, and the value of your money is designed to decrease over time. It's a cycle of invisible control, where we are all running on a treadmill, working harder just to stay in the same place financially. Your savings aren't just sitting there. They are actively being used to fuel a system that makes them worth less. This isn't some conspiracy theory. It's just how the modern financial system is designed to work. The money in your bank account is really just an IOU within a vast interconnected web of debt. The real question isn't whether your money is safe in the bank. The real question is, what is money really? It's an illusion of wealth, a promise backed by more promises, all built on a foundation of ever-expanding debt. Understanding this is the first step toward true financial literacy. If this opened your eyes, make sure to subscribe and hit that notification bell. We're here to uncover the truths about money and finance that they don't teach you in school. Thanks for watching, and we'll see you in the next video.